It's been a couple days since I made a video, so in this video we're going to look at Bitcoin, we're going to look at altcoins, the total market cap, the stock market, and I'm just going to give you my thoughts on where we're at and what we could be expecting for the next few weeks ahead. What's up guys, Dirk here from IntelligentCryptocurrency.com. If you are new to the channel, hit the subscribe button down below, click that notification bell so you do get future updates. If you want to get on my email list so I can notify you via email when I upload a video or when there's something important to share, first link in the description down below. Follow on Twitter, Instagram, and our free Telegram channel. The links are all down below in the description. Alright, so as I'm making this video, it is Friday, it is March 25th, 2022. Bitcoin is currently trading at 43,862. You can see they've changed the design a little bit of TradingView, and I kind of like it. They changed the fonts a little bit. It looks kind of nice. So we have a nice little pump here towards the end of the month, and today is options expiry. So the last Friday of every month is the CBOE options expiry for Bitcoin, which the max pain was set around $42,200 for this option expiry, meaning that the closer the price expires to that max pain level, the more both long and short, so put and call options expire worthless, which means, you know, that is the maximum pain for both sides. And we've seen this over and over. The market tends to gravitate towards that max pain level, obviously to cause as much pain to the participants as possible. So we're going to see how that expires today. Maybe we get a little bit of selling pressure towards that. But what I want to show you now is you can see these red boxes here. You can see time-wise they're almost exactly the same, meaning that we have consolidated for almost exactly the same amount of time as we have after the May 2021 sell-off, where from about May till July we had the sideways trading in a range where it got pretty boring. Now we've had that exact same kind of setup here, where from about the beginning of January we have consolidated sideways, and actually towards the end of this consolidation period at the same amount of time, you can see when we started that big rally from 28,000 to 69,000, we got something similar here where we are potentially starting a push to the upside. A lot of people are still betting on a continuation down here. A lot of people are still bearish. A lot of people are thinking we go to 20,000 or maybe even below. And I actually do think that is a possibility, but I do think it's more likely that we still go up first before maybe in the next 6 months or so have a revisit into that $20,000 range. Again, it's not guaranteed that we will, but we might not be out of the woods yet. But it seems that when people are mostly betting on more downside and they're getting too bearish after a long consolidation period, after a 50% sell-off, that the likely move that will cause more pain is actually a rally where people are short that are going to get liquidated if they're using leverage. Don't do that unless you know what you're doing. And people who are in cash positions, a lot of people have gotten out of the markets, reduced positions, or maybe even largely out of the market. And if the market continues going up while they're sitting on the sidelines, that is also equally painful, because you can see that rally going up and 50% or 100% gains while you're not in the market after having suffered losses the last couple months. Obviously that is painful, but we are still, like I said, completely not out of the woods yet. So if you look, we are now above that 50-day moving average. So that is something that is positive, that is bullish. You can see when we broke above the 50-day, the blue one here, and the blue one, that we got these big shoots to the upside. But you can see here how much trickery there has been where it's above and below this 50-day moving average. So far we've managed to stay above it, but we are still below the 200-day moving average, which is the red one over here. And if we change it to weekly, you can see the most important average to keep an eye on is still the 50-week moving average for a directional kind of bias. And as long as we're under that 50-week moving average, there is still risk of a sell-off and more downside action until eventually potentially a capitulation towards that 200 that could still happen in the next 6 months or so. But if we can get a weekly close and we can get back above that 50-week moving average, which is currently just about $46,000. Sorry, they're $46,000. If we can get back above that with a weekly close, then maybe this ended up being a fake out and we can continue the upside trend. But until we get that, we have to consider there's still downside risk. and we can't get too happy before we get that weekly close above 46,000, which you can see there's also just basically a lot of resistance here around this 46,000. These tops over here that we've been rejected from, the bottoms over here. If you zoom in a little bit more, actually let me just do this. You can see if we bring this up, this $46,000 level, there's a lot of support and resistance. You can see over here in the past, over here a lot of support above and below, through here support on top of it, resistance below it, and now that is also the point of the 50-week moving average. So I think this $46,000 level is very important. If we can get above it with a weekly close or 2 weekly closes, that's going to give a lot more strength towards the bullish case and potentially further upside over the month of April, which is traditionally, historically, a bullish month. Now, we are still a couple days away from the monthly close, so that is going to be interesting to see where we close. You can see if we close above 43,000 or even above 44,000 or higher, that monthly candle is going to end up looking very bullish, and it increases the chances that we do go further up and we have a green April, in my opinion. So obviously on the 1st, I'm going to be doing an update on the monthly candle close, and it's also going to be the quarterly candle close. So that happens obviously only every 3 months, and you can see it's starting to shape up like there might be a potential reversal here. So if we can close 44,000, ideally if we can close this in the green, meaning above the yearly open, so above 46,000, I don't know what the chances are of that happening, but you know, this candle might end up looking good on the quarterly, which means that the next 3 months in Q2 and second quarter is also usually historically bullish, that we might actually end up getting a big green quarter. So April, May, maybe even June, that ends up being green. So we'll know what that's going to look like on the 1st. So make sure, again, you're subscribed to the channel and you get that update on the 1st. So overall, it is looking promising, but we can't get too excited just yet. We have to get that weekly close above that 50-week moving average before we can start getting more bullish on the whole crypto space. Now we have the S&P 500. I just want to show you this too, because we had the death cross. It was looking bearish. We had a sell-off in the S&P 500 for, you know, the first 2 months of the year. Everyone was worried what was happening with Ukraine, with Russia. That's still going on, but it seems to have kind of died off a lot on the news, that fear and everything that was happening around that. And at the moment, at the point where we got the death cross with the 50-day moving average below the 200, you can see that marked the exact bottom of the March 2020 sell-off, and we had a huge rally afterwards. And I've posted this in real time, basically when we were at those lows, when we got that death cross. I posted on Twitter, you know, could this potentially be the repeat of where at that exact point of the death cross we got a big move up? And so far that has proved to be exactly what has happened. At that point of the death cross in the S&P 500, we started getting a major rally that ended up being the local lows, and so far we are back above the 50 and the 200-day moving average, even though just barely. So the question is this a relief rally that's going to end up going lower, or is it actually the start of potentially a multi-month or longer new uptrend where the Fed is going to start printing more money, central banks are going to print more money, and the whole stock market, the whole equity market is just going to start a massive rally, potentially to new all-time highs, before the market goes through some sort of major crash, if that is even going to happen. And of course, if the stock market continues going higher and the whole macro environment recovers and everyone gets bullish there again, well, then that's going to be good for Bitcoin and crypto, and that really gives the chance of potentially a continued bull run in Bitcoin and crypto, where we saw 2020 and 2021 as potentially a single bull run, but maybe it was just a consolidation phase where we had that double top scenario of 66,000 and 69,000. We sold off again, but that the real leg up for the finale of the 2021 crypto bull run is yet to come over the next maybe 1 year, 1.5 years, and that we're going to indeed end up going way over $100,000, with altcoins obviously following behind and having a big rally before we go into an extended bear market. That is still a possibility, so it's going to be exciting to see how this is going to play out. And then finally, just a quick look at the total crypto market cap, which you can see looks very identical to actually Bitcoin's price chart. So, if I didn't tell you this was the crypto market cap, at a glance, you might actually think that it's basically Bitcoin, because we had the higher high over here, the sell-off, and the consolidation. So it looks very, very similar. And we're basically, if you can draw like a triangle pattern over here, if we can get a breakout to the upside, we could see a nice rally in the whole crypto markets in Bitcoin over the next few weeks, maybe in Q2, so in April and potentially in May, for a bit of an extended rally. Now that doesn't mean necessarily we are in a new bull run. That's obviously going to depend on different factors, but I do think that there's enough pointing towards potentially a sizable bounce over the next few weeks, over April, and maybe over April and May. But we're going to have to wait and see how this month closes, how this quarter closes in 6 days from now. I'll do an update again, like I said, on the 1st to see how that ended up working out. And then we have to be careful if we do get this rally into, say, April and May, and we see signs of failure there, that it might have ended up being a rally in a bearish trend that we still have to see new lows somewhere later in the year, maybe in August or September, September being the worst month of the year for crypto. So we got to watch out that it isn't just a new run up that's only going to continue up from here. We might get the scenario of where we get a bounce for several weeks, then a new low, a final capitulation, and then only later in the year, maybe Q4 or even Q1 of next year, where we start potentially a new leg up. So it's going to be exciting to see how this all develops. We have to remain flexible, but for now, I am leaning towards upside over the next few weeks. Of course, do your own research, make your own decisions. This is not financial advice, but I am feeling bullish for the next few weeks ahead. Make sure that you follow on social media, on Instagram, Twitter. There's a free Telegram. Links are down below. Get on my email list, subscribe, and I will see you in the next video.